Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hey, Jim. Here we are, and it's Friday.
The market is setting itself up for a recovery of sorts from its downturn earlier this week.
Well, it looks like it. Gosh, you had many things heading down. You had base metals, copper in a tremendous slide. We thought it could drop to maybe 272, but it got down to, I think, 258. Gold, silver sector beat up as well. So it just, the final week of it seemed excessive. And of course that was tied to the U.S. dollar jumping up for that extra leg up, and that was tied to, guess what, the discovery of financial problems in Turkey. And then, of course, you had the president of Turkey urging his people to sell dollars and buy the Turkish lira to be patriotic. My God. So anyways, yeah, so technically things got quite oversold, from which it looks like a bounce has started. And also, you know, the into Labor Day weekend can be a positive for the markets. So on our view here, Jim, it'd be a good chance to lighten up on equities. And the other thing, even more important, is you don't want to wear white shoes and the white belt after Labor Day. It's just a no-no. You know, actually, they call it the full Cleveland, and I wouldn't even wear it in the summertime. But it's deadly to be seen with white shoes on after Labor Day.
What do tennis players do?
They look smart. So, a rebound, but basically, the financial markets are precarious. Precarious because of a long period of speculation, of which it became very intense going into December, January. The valuations were up at the levels last seen in 2007 or 2000, but valuations like that, the street will always rationalize it and say, well, the earnings are better than expected. But when you got the chart on whatever valuations, PEs or relative to GDP or wages up at the highs that they were in 2007, the market's trying to tell you something. So precarious because of two things, a speculative trust and also valuation. And so the other one is we're looking at is the things that really condition the stock market, which when you are in a speculative market, it's a turn in credit markets, interest rates, the credit spreads, which is the difference between high grade and low grade bonds. They are attempting to reverse. And then also the yield curve, which is the difference between longer dated bonds and shorter. And that's sort of faltering. It's no longer supportive. So the other one that was supportive for our rally that we expected out to around May had been better industrial commodity prices. And yeah, base metals were better. Copper had a good rally. And lumber sort of kind of set its own bubble and tremendous technical excesses. As I wrote at the time, it jingled all of our technical bells and whistles and has taken a tremendous crash, but again, a bounce. So let's figure maybe the next few weeks can be positive. And then on the industrial commodities, which are important, copper can have a low in November, lumber, I think, in October, if I recall rightly. And then, of course, crude oil. You can often have very good low for crude oil in December, January. So it doesn't look so good after August, which is what our target has been through since earlier in the year anyways, that good to mid-year, and then after August, not so good.
Well, depending how much lumber is burnt by the BC forest fires and how many hurricanes hit the U.S., you could see lumber prices climbing again after that.
Oh, let's just do one season at a time, Jim. And
yeah.
that was an exceptional rally in lumber prices. Everything gathered up. There was the rebuild after the storms, and then you had the business boom, and then you also had a lack of rail capacity to move lumber, so it was just a whole bunch of things conspired to push the price away too high. So, and one can watch it come down. Again, after August, I think there's a time when you could have liquidity concerns. You've got a special stock like. Been watching Tesla, which has probably at any time been overly shorted because it's such a promotion and using taxpayers' money on a very compelling story about electric cars, which may not remain compelling for too long. But the Musk guy heads it up. He's been acting erratic for the last 3 months. And I continue to conclude that the guy's overly long, and he's had some good promotional moves on it, squeezing the shorts. And the latest one was to bring in a Saudi investment fund, and they did not, I think it was more than $1 billion worth of stock, but they didn't buy treasury stock. They bought stock out of the market, that's just plain manipulation. And so we'll see how that one goes. But my read of the guy is that he has now become nervous, and that nervousness would be due to realizing that he cannot get out of his position, and he's probably highly leveraged. So it'll be fascinating. It was like a similar promoter in 1929 in England, Clarence Hattree, who had a number of successes and went from nothing to a comparatively fair amount of money in no time at all, and then was going to take over a fairly large steel company in England. And early in 1929, he had everything lined up with promises for funding and all that sort of stuff. And then as the year progressed, various promises fell by the wayside. Then he knew he was hung up to dry and with his own position leverage, so he even had the audacity to go to the governor of the Bank of England and said, give me some help, because if I go down, it'll take the market with them. And the Bank of England did not help him specifically, and he failed. But it's not as if Hattree pushed off the failure. He was just one of the casualties on then an overly speculated market. So that's the thing in this, Jim, is to watch and measure the speculation, which fortunately with technical research we can do these days. And let's conclude this segment with just saying it's precarious. And the Tesla thing with Musk is going to be very interesting to follow.
We'll have more with Bob Hoye right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN AF.
surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're chatting with Bob Hoye. Bob, President Trump has ordered a study into whether companies should report their financial situation every 6 months instead of every quarter. What would be behind a move like that?
Well, I think my first thought, Jim, is that it would cut down the costs of getting... Now, a company's going to keep track of its accounts on maybe a quarterly or maybe a monthly, but to come out with a quarterly is an extra effort rather than just keeping, the accounts internal. So I think, one, it would be reduced cost, and the other thing is more of a strategic thing whereby there'd be less focus by management on coming out with a good report every quarter, and there'd be less focus by the street on expecting a good result at every quarter. So I like it. Not that I'm an accounting guy, but it makes sense to me. Less fuss and bother, and allowing more focus on a longer term. So let's give it a check mark, shall we?
Well, I know, too, when you do a quarterly report, even though we're supposed to be in a paper-free world, that always results in some big, thick, well-produced, fancy-covered thing to show your shareholders that, yes, we've been working hard. Even that can turn out to be a big cost for a big company, depending on how many shareholders you have.
Yep, and if you cut it in half, beyond the cost and whatnot, you got to assign some staff to look after all that stuff. So, no, I think it's a good idea. And the other one would be reducing the number of state holidays that statists grant themselves. And I know that in medieval times, the church was making itself popular by granting all kinds of holidays during the year. A saint holiday this, saint holiday that. Church ales, which were what they were, the church was hosting, and with beer. So they were out to something like 150 days of a year as some kind of a, let's look at the word, to go from holiday to holy day. And of course, businessmen were carrying that. So each day that somebody wasn't working, their plant and equipment wasn't being used, and so that was part of the Reformation to make the economy more efficient and prosperous. And this would also work as well. And yet, I think something I heard in the radio the other day that either British Columbia or federals are yet working on another holiday. And here it's cheap politics. It looks like the politicians are looking after you and giving you something when actually they're making the economy less efficient, so they're taking something away from you. What a bunch of nonsense.
We'll have more with Bob Hoye right after this, and we'll be answering a listener's question.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. We have a listener question. Bob, many Elliott wave analysts say that gold since December 2015 has been experiencing a bear market rally and that a final fifth wave down lies ahead. Is that true, or is the current action in gold just a very long consolidation or basing before a further push up through the 2011 highs?
It's a good question, and we've looked at Elliott wave analysis a number of times over the decades, and it is eligible for a lot of interpretation as to this count and that count. So while that method has always been available, we don't use it because there are better things around. And then, of course, one of the things going for Elliott wave is that you don't have to be able to count any higher than 5 on their 5-way things. But now to get to the real side of gold, if you want to look at the real price, where you take the price and divide it by the CPI rate of inflation, and in great financial bubbles like we have been in, and this is all the way back to 1720, the real price of gold goes down in a bubble and gold stocks underperform. So the real price of gold has been coming down since 2011 into 2016, and we can say it's sort of basing and trying to improve since then. But my guess is that when this bubble really does roll over, then gold's real price will take a move. And the significance, Jim, is that the real price going up reflects profit margins. So profit margins going up, they're going to make more money. And you don't have to worry about what it's doing relative to the dollar or relative to euro. It's relative to the cost of mining. And so in every post-bubble contraction, the gold mining sector has become one of the featured industries where it outperforms most everything else. So I'm looking forward to it when it comes. So on the Elliott wave question, we have other tools that work better, and this one includes that gold sector would have been weak for the last few years, and also, as we mentioned earlier in the show, gold at the moment did become oversold enough for at least a quick tradable bounce. So, which everybody's going to enjoy. It's been pretty bleak for a long time.
Bob, I'm just wondering, should you be into gold miners rather than gold because you have to pay to store gold, whereas if you're in the miners, if gold goes up, they go up?
Oh yeah, you get the better play, Jim, is in the gold stocks, whether they're the big senior producers or whether the middling size. But my own inclination is I kind of like, in a good gold market, I like the exploration side, because if you are on to a winner where it's creating an asset, you know, it's more than just price gold going up. You're creating an asset if you're sort of exploring and drilling off an ore body. So that's the really exciting side, and I look forward to those. The parties are there, Jim. It's just that we're not there yet, but they will be there. So,
Bob, have a great weekend.
You too, and we'll look forward to talking next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet, you can find us on Twitter at HowStreet. We've changed that recently. Our YouTube channel is Talk Digital Network. If you have any questions for Bob or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.